So, hello my dear students, so welcome for our discussion for accounting for business combination. So in this video, I will be discussing or I will be presenting some sample problems now, still in relation to accounting for stock acquisition, okay, at the date of acquisition. Okay, so I have here our problems. Okay, so we have here our first problem. We have on January 1, 2016, Ashley Corporation purchased 80% of the common stock of Rocks Corporation. So separate balance sheet data for the companies at the combination date are given below. So we have here the separate FS of Ashley and also the separate FS of Rock. So at the date of the combination, the book values of Rock's net asset was equal to the fair value of the net assets except for Rock's inventory, which has a fair value of 210,000. Okay, so assuming full goodwill, so these are the questions. So the amount of goodwill, the amount of total assets, and the amount of total shareholders' equity to be presented in the consolidated balance sheet immediately prepared after the business combination. Okay, so in this case, diba, we'll be using full goodwill. But before that, let's compute muna for the fair value of our net assets. Okay, so we can start with the assets at book value. Now we have 1,887,000. This is the book value of the assets of Rock Company or subsidiary or yung acquiry natin. And then, yung ano lang naman ng account na nag-defer ng assets, yung nag-defer yung fair value at book value na yung inventory lang. So, yung inventory, may book value na 133,000 but meron siyang fair value na 210,000. Okay, so therefore undervalued siya. So 200,000 less 133,000, so undervalued siya by 77,000. So this is actually the total assets at fair value. And then yung liabilities natin, so we have 497,000. So the fair value of our net assets actually 1,477,000. That's the fair value of our net assets. Okay, so to compute for the goodwill, so since hindi man diba given yung fair value of the non-controlling interest, so therefore i-assume natin yung fair value ng non-controlling interest by dividing the consideration transferred divide the controlling interest and then multiply natin sa non-controlling interest na rate. So question, how much is our consideration transferred? So to take note that this separate FS of Ashley already reflected. So na-reflect na dito yung entry to record the acquisition since may debit naman na investment in Rock's company. Therefore, diba, ang i-debit natin sa investment account is actually the consideration. Okay, consideration paid of ni Ashley kay Rocks. Okay, so therefore, our consideration is 1,372,000. Okay, so to estimate the fair value for non-controlling interest, okay, so 1,372,000 divide 80%, then i-multiply natin by 20%. Okay, to get the assumed fair value of our non-controlling interest. Okay, so therefore the sum of the consideration transferred and then the non-controlling interest is 1,715,000. Okay, and then our fair value for net assets is 1,477,000. Okay, so ang share ni controlling interest dyan, actually 181,600, and ang share ni NCI, okay, it's actually 1,400. Okay, so here, therefore our total goodwill is 238,000. Okay, so yung goodwill natin 238,000. Okay, goodwill. Okay, Pero ang share ni controlling interest sa Goodwill is 190,400. Ang share ni non-controlling interest is 47,600. But the value of our LCI is 343,000 and the value of our Goodwill is 238,000. Okay. Now, to determine the total asset, so we don't need actually to prepare pa working paper and then provide eliminating entries, no, in order to determine the balances of the assets, liabilities, and shareholders' equity immediately after the acquisition. So we can actually solve it this way, no. So we'll have total assets at book value, no, book value ni parent, okay. So how much is that total asset at fair value ni parent, okay. So we have 4,305,000, okay. Then details. Then total assets at fair value, same pa din, book value kay parent, fair value kay subsidiary. So the fair value of the assets of the subsidiary is actually 1,974,000. And then since diba in the consolidated statements yung investment account will be eliminated and then mag-recognize tayo ng goodwill. So therefore i-deduct natin yung investment na 1,372,000 and then yung goodwill natin yung goodwill is actually 238,000, so recognize natin, okay. So therefore your total assets is actually total asset at book value ni parent, no, plus total asset at fair value ni subsidiary, less investment account or investment in RACs, plus the goodwill. Okay, so this will be your total assets. 5,145,000. Okay, so the total assets, consolidated total assets is 5,145,000. Okay, so the next question is actually to determine the total stockholders' equity. See, so to get the total stockholders' equity, so pwede din natin deduct from your total assets yung total liabilities. Okay, so the total liabilities of Ashley Corporation is actually 721,000. Okay, and then the total liability of RAC is actually 497,000. Therefore, our total consolidated liabilities is actually 1,218,000. Then from your total assets, now 5,045,000 plus total liabilities of 1,218,000, we have total shareholders' equity of 3,927,000. Or simply, yung pag-compute mo sa total stockholders' equity, you just have to add the equity account, diba? Kasi ma-eliminate man yung equity account ni subsidiary in preparing consolidated financial statements, diba? So therefore, yung equity account in the consolidated balance sheet is actually the equity account of the parent. Okay, so yung capital account ni parent or ni Ashley is actually 2,800,000. Okay, 2,800,000. And then yung retained earnings niya is 784,000. And then don't forget the fair that the non-controlling interest shall be presented in the consolidated balance sheet. So our non-controlling interest, diba, is 343,000. So we have here our total shareholders' equity. That's the sum of the capital account or the capital stock. Okay, capital stock. Then the retained earnings. Okay, and then the non-controlling interest. So this is 2,800,000. Okay, so you have here that's 3,927,000. So you can actually solve total stockholders' equity, no, by deducting from your total assets, total liabilities, or simply compute the total stockholders' equity by adding all the equity accounts of the parent. Plus, don't forget to add the non-controlling interest. So we have 3,927,000. Okay. So we have here our second problem. No, so our second problem, so we have here, Best Company has gained control over the operations of your corporations by acquiring 85%, no, so 85% of its outstanding capital stock for 2,580,000. So this amount includes a control premium of 30,000. So acquisition expenses, direct and indirect, amounting to 83,000 and 42,000 respectively. Okay, so we have here the separate FS of Best Corporation, and then kay here then, no, corporation, both at book value. So the following was ascertained on the date of acquisition for your corporation. So the value of receivables and equipment had decreased by 25,000 and 14,000 respectively. Then the fair value of inventories is now 436,000, whereas the value of land and fair value of building has increased by 471,000 and 100,000 respectively. There was an unrecorded accounts payable amounting to 27,000, and the fair value for notes is 738,000. So we have to determine the total assets and total shareholders' equity prepared immediately after the combination. Okay, so same kanina, no? So we'll compute first the fair value for net assets. So let's start with the total assets at book value of Cure, which is actually 2,860,000. Yan. That's 2,860,000. And then, there are may mga information, diba, nag-provide that mention or yung data nag-provide for the undervaluation and the overvaluation of our assets and liabilities. So we have here, yung receivables daw natin had decreased by, so nag-decrease yung receivable natin by 25,000. Also, yung equipment natin nag-decrease by 14,000. Okay? And then yung inventory natin is now 436,000. Kasi yung inventory natin is 400, at book value is 360,000. So, yung fair value niya is 436. We have 436,000 less 360,000. So, undervalued siya by 76,000. So, ang land natin and building had increased by 471,000. Okay? Land and building had increased by 471,000 and 107,000 respectively. Okay? Guess, ito lang yung data in the difference between the book value and fair value for assets. Therefore, our total assets at fair value is actually 3,475,000. Then, we'll need to determine the total liabilities at fair value of Cure Corporation or subsidiary. So, the book value of liability is actually the sum of our accounts payable and notes payable. Okay, it's actually 983,000. And then, yung accounts payable daw natin, we have unrecorded accounts payable amounting to 27,000. Okay, so that's undervalued. Undervalued yung ating accounts payable. Okay, and yung notes payable natin, the book value is 730,000, but the fair value is 738,000. Okay, so therefore, undervalued siya by how much? Okay, so undervalued siya by 8,000. Therefore, our total assets at fair value, okay, our total assets at fair value is 1,018,000. So the fair value of our net assets is actually 3,475,000 less 1,018,000. That's 2,457,000. Okay. Then to compute for the the goodwill. So since 'di ba, hindi given yung fair value of our non-controlling interest. So we should assume the fair value of our non-controlling interest. But you take note that in the problem, it states that the consideration of 2,580,000 includes a control premium of 30,000. So the 2,580,000 na consideration, so will be our basis in estimating the fair value of our non-controlling interest. But since this 2,580,000 includes the control premium, of 30,000, i-deduct natin siya, okay? Then 2,580,000 less 30,000, i-divide natin by, it's actually 85%, 85%. 85% kasi 85% tsaka 15% yung non-controlling interest. So that's 2,580 divide 2,580 less 30,000 divide 85%, then yung result i-multiply natin by 15%. So therefore, we have the fair value for non-controlling interest is 450,000. Okay? So the total consideration plus the non-controlling interest is 3,030,000. So the fair value of our net assets is 2,457,000. So we'll get the share of the NCI or the controlling interest, to assess, i-assess natin if mas greater ba yung fair value of the NCI share na fair value of the net assets of the subsidiary. Okay? So we can say that the assumed fair value of non-controlling interest is valid since mas greater man siya kaysa sa proportionate share ni non-controlling interest sa fair value of net assets of the subsidiary. Okay? So our goodwill is actually 573,000 and our non-controlling interest is 450,000. Okay? So to compute for the total assets, so you take note that in the given separate FS of best and care is actually hindi pa nakaka-reflect yung pag-record na acquisition. Okay? Kasi 'di ba, wala pang investment account, So therefore, pag-compute natin sa ating total assets, okay? Pag-compute sa total assets, it should be total assets at book value ni parent, di ba? That's 8,750,000, okay? 8,750,000, okay? Total assets at fair value ni subsidiary, na-compute natin to kanina, okay? It's actually 3,475,000, okay? Then, yung consideration on cash, that's 2,580,000, deduct natin. Then, yung na-incur natin, acquisition-related cost, we have 83,000 and 42,000. Okay? Deduct natin kasi, di ba, hindi pa man na-record yung acquisition. Then, pag ma-record yung acquisition, of course, pa-deduct yan siya sa cash account ni parent. Okay, so we have 83,000 and 42,000. Okay? 83,000 and 42,000. Okay? Therefore, our total assets, and of course, i-add natin si Goodwill. Huwag pala natin kalimutan si Goodwill. Okay? Goodwill. So, our Goodwill is actually, how much is our Goodwill? Our Goodwill is 500, 573,000. Okay? So we have here our total asset is actually, so our total assets is uh, 10,093,000. That's our total assets. Yan, 10,093,000. It's actually letter E. Okay? And then our total liabilities, okay? So, yung kay best or kay parent is actually at book value. So, yung book value niya is actually the sum of the accounts payable, and the, okay, accounts payable natin is 675,000, and then the notes payable is 1,400,000. Okay? Plus, yung kay Cure, yung kay subsidiary, it should be at fair value. So, na-compute natin yung fair value ng liabilities ni Cure kanina, no? It's actually, how much? It's actually 1,018,000. Okay? So, therefore, its total liabilities is 2,075,000 plus 1,018,000. Okay? So, the total liabilities is 3,093,000. So, from your total assets na 10,093,000, i-deduct lang natin yung total liabilities na 3,093,000 to determine the total shareholders' equity, no, amounting to 7 million. Okay, that's actually 7 million. Okay, it's 7 billion. Or, you can compute our total shareholders' equity by adding all the equity accounts, no, of the subsidiary plus the non-controlling interest. Okay. So the capital stock is actually 3,400,000. Okay. No, 3,400,000. No? So 3,400,000. Then the additional paid-in capital natin is 1,575,000. Okay. 575,000. And then, yung retained earnings natin na 1,700,000, okay, actually, i-deduct natin yung acquisition-related cost natin. Okay, how much is our acquisition-related cost? No? It's actually, it totaled 125,000. Okay, minus 125,000. Kasi, di ba na-record yung acquisition-related cost? I-deduct natin siya sa retained earnings. That's 1,700,000. Okay, less 125,000. And then, our NCI is actually okay, the retained earnings is 1,700,000 less acquisition-related cost of 125,000. That's 1,575,000. And then our NCI, how much is our NCI? Our NCI is actually 450,000. Okay, so this will be your total stockholders' equity. So that's 7 million. Okay, so yan, no? I presented two ways in determining the total shareholders' equity, no? So it's up to you if you gamitin mo whether you compute your total assets, then deduct the liabilities to determine total shareholders' equity, or simply add all the equity accounts plus the non-controlling interest. Okay, so thank